Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ACADIAN Asset Management INC quarterly report. Wrightsphere Investment Group Inc. offers a range of services to individuals and institutions through its subsidiaries. The company's key businesses include managing separate client-focused portfolios, launching equity mutual funds for clients investing in public equity markets, investing in fixed income markets, investing in alternative investment markets. The significant increase in ACADIAN Asset Management Inc. stock price, a year of robust performance. ACADIAN Asset Management Inc. NYSE. AAMI has experienced a remarkable surge in its stock price, rising by 49.17% in the past year, with some reports indicating an 86.66% increase and an all-time high of $51.77 on October 30, 2025. This notable growth can be attributed to several key factors. The company's strong quarterly financial results have been a major contributor to its stock price surge. In 2024 and 2025, ACADIAN reported significant increases in earnings per share, EPS, revenue, and assets under management, AUM. Notably, the company achieved record-breaking AUM growth, with a 34% increase from Q2 2024, reaching the highest level in its nearly 40-year history. The consistent positive financial results have been driven by several key events. The strong close to 2024 was marked by a 109% increase in GAAP EPS and a 69% rise in economic net income, ENI, EPS compared to the previous year. In 2025, ACADIAN continued its strong performance with record-breaking net client cash flows, NCCF, reaching $13.8 billion in Q2 2025. The company's ability to attract significant net client cash flows has been a major factor in its stock price surge. The positive financial results have also been driven by the growth in management fees, reflecting a 34% increase in average AUM. Overall, ACADIAN Asset Management Inc.'s robust performance and consistent positive financial results have collectively fueled the significant increase in its stock price over the past year. The primary drivers of revenue growth or decline can be summarized into two main categories: management-related factors and market performance. On the growth side, increased management fees, consolidated funds revenue, average assets under management, AUM, and net client cash flows have contributed to revenue growth. Additionally, strong market investment performance and performance fees from accounts with incentive fee features have also boosted revenue. Furthermore, variable compensation and profit-sharing distributions to employees of ACADIAN LLC have added to the revenue. On the decline side, a decrease in performance relative to benchmarks has resulted in a significant drop in performance fees. This decline is evident in both short-term, 3 months ended September 30, 2025, and long-term, 9 months ended September 30, 2025 periods, with a substantial decrease of $9.9 million in the former period. Net income and profit margins, trends and factors. The financial summary reveals that net income generally increased over time, with some fluctuations. However, profit margins showed variations but remained relatively stable overall. Specifically in 2025, net income rose to $77.4 million for the 3 months ended September 30, up from $68.3 million in 2024, and $211.6 million for the 9 months ended September 30, up from $180.9 million in 2024. Notably, profit margins experienced some decline. The ENI operating margin decreased by 3.9% to 17.6% for the 3 months ended September 30, and by 1% to 18.5% for the 9 months ended September 30. Factors affecting net income and profit margins include changes in assets under management, variable compensation, and ACADIAN LLC key employee distributions linked to business profitability. The effective weighted average fees earned for equity markets-based AUM and foreign currency denominated AUM also had a significant impact on net income and profit margins. Overall, while there were some fluctuations, the financial performance remained relatively stable. The company is indeed generating positive operating cash flow, as evident from multiple sources within the financial summary. Page 67 explicitly states this, while page 17 provides supporting evidence with a net increase in cash and cash equivalents of $0.4 million. Furthermore, the operating activities section on page 67 shows a significant increase in cash flow from $59.1 million to $63.5 million over the past year, solidifying the company's positive operating cash flow performance. The company's debt level and interest expenses have undergone significant changes over the past year. While there are varying trends, some notable shifts include an overall increase in total debt from $616.1 million to $640.1 million, with operating lease liabilities rising by $8.8 million. Conversely, debt decreased by $5.2 million as of September 30, 2025 compared to December 31, 2024. Interest expenses have also fluctuated, with a decrease of $100,000 for the 3 months ended September 30, 2025, and an increase from $2.5 million to $3.9 million for the 9 months ended September 30, 2025. These changes suggest that while there are some increases in debt levels and interest expenses, other periods show a decrease or stability. However, it is essential to note that these changes may be influenced by various factors such as new credit agreements, interest rate adjustments, and lease terminations. Management's outlook on company strategy. According to the financial summary, management is focusing on cost management and investing in short-term investments with higher returns. The company is also prioritizing liquidity, as indicated by its use of adjusted EBITDA as a key metric. Management believes that available cash and cash equivalents will be sufficient to fund current operations for at least the next 12 months. However, there are potential risks to consider, including market risk, which may lead to declines in revenues and net income. To mitigate this risk, management has implemented a profit-sharing economic structure with employees, sharing the risk of market fluctuations. Overall, management is taking a cautious approach to financial management while also investing in opportunities for growth. The company's financial summary reveals a notable trend in its capital management strategy. Specifically, it has opted to buy back shares rather than distribute dividends to shareholders. This decision is highlighted by the purchase of 1,799,423 shares in 2025 at an average price of $26.64 per share. By repurchasing these shares, the company aims to increase shareholder value and potentially boost its stock price. That concludes the financial summary for Acadian Asset Management Inc. Feel free to comment below, and I will be happy to answer them when possible.